Part A.
Today, I will briefly explain about MFRS 134, Interim Financial Reporting. MFRS 134 is a Malaysia accounting standard for preparing interim financial reports such as quarterly or half-year report. Its purpose to ensure companies provide timely and reliable financial information before the annual report is released. There are 4 key points. First, minimum content. The interim report can contain either the full set or a condensed set of financial statements. Secondly, recognition and measurement. The same accounting policy used in the annual report must also be used in the interim report. Third, disclosure. Company must report any significant event or transaction since the last annual report. And lastly, comparative information, which is the report must include figures from the previous period for the company. In conclusion, MFRS 134 helped improve transparency and allowed users to monitor the company performance throughout the year. Next, I will explain the application for MFRS 134 in Kind Holding Berhad and Bank Islam Malaysia Berhad. First, for Kind Holding Berhad, interim report show the changes in asset, liability and profit during the year. For example, increase in inventory and borrowing can affect the company's financial position and the profit. This helps investors understand the company's performance before the annual report. Second, for Bank Islam Malaysia Berhad, interim report show the financial income, profit, liquidity and risk exposure. This is important because bank need the higher transparency and closer financial monitoring. Overall, MFRS 134 help both company provide timely financial information to the stakeholder. In this slide, I will explain 2 significant transactions that affected Kind financial position and financial performance. First is trade receivable. The annual report states that trade receivable increased because of the expansion of the rent-to-own business, where customer makes payment over a longer period. The statement of cash flow also show an increase of RM24.247 million in trade and other receivable. This increased the company's current asset, which improved its financial position. However, slower in collecting reduced operating cash inflow and may increase the risk of impairment losses, which could negatively affect the future financial performance. Second is bank borrowing. Total borrowing increased from 57.46 million to 84.84 million, while the statement of cash flow recorded RM29.869 million in new borrowings. This improved short-term liquidity by providing funds for business operation. However, it also increased liability and may lead to higher finance costs, which can reduce profit and weaken financial performance. Overall, both transactions had a direct impact on Kind financial position and financial performance during the year.
Thank you, Anis. My name is Nur Fariha and I will present the answer for question number 3 regarding the interim reporting period for Bank Islam at the second quarter. Firstly, statement of financial position. The current interim period is as at 30 June 2024, while the comparative interim period is as at 31 December 2024. For the statement of profit or loss and other comprehensive income, the current interim period covers the 3 and 6 months that is from 1st April 2025 until 30 June 2025 for 3 months ended, and 1st January 2025 until 30 June 2025 for 6 months ended. While the comparative interim period is from 1st April 2024 until 30 June 2024 for 3 months ended, and from 1st January 2024 until 30 June 2024 for 6 months ended. Finally, for statement of changes in equity and statement of cash flow, the current interim period is the 6 months ended 30 June 2024, while the comparative interim period is the 6 months ended 30 June 2024. This slide shows the statement of financial position of Bank Islam Malaysia Berhad. The advantage of this interim statement is that it provides a comprehensive overview of the group's financial health midway through the year, allowing for a comparison of current asset and liability levels against the previous year end. Next is the statement of profit or loss and other comprehensive income of Bank Islam Malaysia Berhad. This is beneficial for monitoring the group's operational performance and seasonal trends to ensure profit targets are being met. Moving on the statement of changes in equity of Bank Islam Malaysia Berhad. In an interim report, this statement is useful for tracking how net profit and dividend payment have updated the total equity and reserve during the period. Finally, we have the statement of cash flow. Its primary advantage is revealing the actual cash movement from operating, investing, and financial activities, confirming that the bank maintains sufficient funding for the rest of the year. That's all from me. I will pass the next slide to Shafiqah.
Part B.
Now, I will explain about Malaysian Financial Reporting Standard MFRS 8 and Chief Operating Decision Maker CODM. So, what is MFRS 8? MFRS 8 is an accounting standard that focuses on an operating segment in a company. The operating segment are just different parts in the business that earn revenue or incur expenses. This segment important because they reviewed by top management to help making decision and evaluate performance. For example, Kin Holdings Berhad, this segment include trading, manufacturing, and investment holding. While Bank Islam Malaysia Berhad, this segment include retail banking and corporate banking. But we have non-operating segment, which is head office and research and development department. So let's move to the CODM. CODM is a function, not necessarily a person. So the function is to allocate resources and assess the performance of the operating segments. And second is to vary from entity to entity, which is CEO, Chief Operating Officer, Senior Management, and Board of Director. Let's look at some example. First, Kin Holdings Berhad. For example, we have Chan Ping Kiat, the executive chairman who sets long-term strategy and growth direction. And we also have Adil Jimmy Mistry, Group Chief Executive Officer, who manage day-to-day operation and control costs. Both of them are involved in decision making, so they can be considered as CODM. Second, Bank Islam Malaysia Berhad. For example, we have Tan Sri Dr. Ismail Haji Bakar, the chairman who provides oversight and ensures report clear and fair. And we also have Muhammad Muazzam Mohammed, former Chief Executive Officer, who led the bank's transformation and ensure Sharia principles in decision making. They also plays important role related to CODM. This shows how important MFRS 8 and CODM are in helping a company operate effectively and make better strategic decisions. So that's all from me. I will pass to the next presenter. Thank you.
Assalamualaikum and hi everyone. Today I will present on segmental reporting based on MFRS 8 operating segment using Kin Holding Berhad as an example. Under MFRS 8, companies are required to disclose segmented information to help users of financial statement understand the nature of business activity and the economic environment in which of the company operates. There are two types of segmental reports, which are operating segments and geographical segment. First is operating segment are based on the company's different business activity. For Kin Holding Berhad, the operating segment are investment holding, trading and services, and manufacturing. Firstly, the investment holding segment mainly involves holding investment and generating income such as dividend. This segment contributes the smaller portion, so it is not the main focus of the company. Next, the trading and services segment is the most important segment. It involves the distribution and sale of electrical and home appliances. This segment records the highest assets, which is RM 320 million and 669,000 in 2024. This shows the most of the company's resources are concentrated in this segment. Lastly, the manufacturing segment involves the production of electrical products. It contributes a moderate amount of asset compared to trading and services. Overall, we can conclude that Kin Berhad is mainly focused on trading and distribution rather than manufacturing, as the trading and services segment dominates the company operation. Second is geographical segments. Geographical segments are based on the location of customers, showing where the company earns its revenue. Kin reports its revenue in several regions: Malaysia, Singapore, Middle East, and other countries. Malaysia contributes the highest revenue, which is RM 2,096,246,000 in 2024. This indicates that Malaysia is the company's main market. Singapore is the second largest contributor, followed by the Middle East, while other countries contribute the least. In addition, most of the company's non-current assets are also located in Malaysia, which show that the company's operations are mainly based domestically. This indicates that Kin is highly dependent on the Malaysian market, but it also expanded into international markets such as Singapore and the Middle East. This information is very useful because it helps users understand which business segment perform best and which market contribute the most revenue, allowing better decision making. Move to the last questions, the benefit of segmental reporting. The first benefit of segmental reporting is that it helps users evaluate business performance more clearly. For example, in Kin Holding Business Berhad, the trading and services segment record the highest revenue, which is RM 528 million in 2021, compared to manufacturing and investment holding. This shows that trading and services is the core business of the company. So, segmental reportings allow investors and managements to identify which segment contributes the most profit and which segments may require improvement or strategic changes. The second benefit is that it helps users assess the company's market exposure and risk across different geographical regions. For example, Kin Holding Berhad generated the highest revenue from Malaysia, which is RM 296 million, followed by Singapore and the Middle East. This shows that the company is highly dependent on the Malaysian market while still maintaining international operations. So, this information is important because it helps users evaluate the level of market dependence, understand the potential risks such as economic condition or currency fluctuation, and also identify opportunity for expansion into other regions.
In conclusion, MFRS 134 ensures that the interim reports are timely and consistent. Meanwhile, MFRS Act provides clear insight into the bank's business segment. Together, they are make the financial data more transparent and reliable for decision making. This is the reference that we are used in this presentation. That's all from us. Thank you so much for your time and for listening to our presentation.